And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, top-down analysis style, and take a look at the news, the chart action, anything that's happening across sectors, industries, individual companies, break it all down, give you guys some analysis so you can better run your daily routine. And welcome back, traders. Hashtag Team Tackle right in the chat as we start our conversation for the week. Markets were closed yesterday in observation of a national holiday here in the U.S., Independence Day, and we are now back as the markets are also back. We got some stuff we got to digest and take a look at as cyclical stocks are actually down here today. Growth is kind of leading. There's a lot of interesting price action from individual companies, Amazon breaking out. We'll look at all of it as we go through the show here. But let's bring everybody in here and start the week with pleasantries. Coach Matt, how are you doing today, sir?
You know, Tim, I'm doing absolutely fantastic. I'm excited to be here, and it was amazing celebrating America's first birthday yesterday and over the weekend.
You know, I love Independence Day for many, many different reasons. And obviously America's birthday, it makes you want to sit back and reflect a little bit. But really all we did, Matt, is kind of chill out, had a couple barbecues, enjoyed the nice weather and all those type of things. What about you?
You didn't want to go on my America's first birthday comment,
I
did you? You didn't know where I was going to take that. You're like, what does he mean by that? I know Matt knows history a little bit more than that.
Explain.
Dude, we all celebrated America like it was its first birthday yesterday. Post-pandemic, America's opening up. We all got out there. We all had some fun. It was amazing.
Like Team Phoenix, it's a rebirth. We had a rebirth.
There you go, buddy.
A rebirth.
Way to hook in that cell. I love it.
Weekend. Oh, awesome. And Emily, how are you doing? How you enjoy your holiday weekend?
I had a fantastic holiday weekend. My folks are here from Kenya, so we were barbecuing and just, having a good old time with the folks.
That's awesome. Yeah, definitely. And Marky, what about you? How are you doing today on a Tuesday, sir?
I'm doing all right. We'll just leave it at that.
Fair
I'm
enough.
excited. Listen, I'm excited. I've been doing some videos for the Cash Flow Vikings. If you're a Cash Flow Vikings member, go check out those videos. I got a lot more to come. I'm just excited. In these market conditions, I'm always like, all right, patiently wait for opportunity. So I'm getting excited though.
If you're going to go I'm doing all right, can I get the I'm doing better than, I'm doing worse than?
No, that is Matt's shtick, and I've tried to do it, and I can't do it as well as Matt.
Nobody
Matt
can
has
do it
that
as well as Matt. Yeah.
Fair enough.
And I haven't heard it for a while. I want Matt to bring it back.
Because you can't force it. You got to have a really good, and you got to have a really bad, and then you got to have a really good zone. You can't force it. It comes naturally.
That's right. We're going to do a full sector breakdown down here today, actually, and take a look at a bunch of individual companies. There's a couple things in the news. Chinese ride-hailing company Didi was under some regulatory pressure. We'll look at Chinese stocks. Get down to all the analysis here in just a minute. Go ahead,
I'm still becoming aware of what Didi is, so I'm still in that phase of this storyline. But
the whole market is. It was like an IPO like last week. So
it really felt like we had a long weekend in America. We were really ready to overreact to something.
It's Overreaction Tuesday.
It's like Tuesday, what are we going to get offended at? Didi, Chinese regulators, China? We're good.
OPEC
overreaction.
Sure. Yeah. A bunch of stuff. We'll talk all about that, the markets here in a second. Before we do though, Matt, I do want to promote our regular sale that we do each and every July. This time of year, it's an annual sale we do around the 4th of July. It went live last Thursday, actually, just for people who wanted to get in early on it. It's going to be going throughout the entire week here. And our Financial Independence Day sale is really centered around 3 or 4 different products. Number one is our annual pro membership, which is on a discount, 23% off. If you're out there and you've been an annual in the past, make sure that you do re-up that. We're now offering coaching. If you scroll up just a hair there, Matt, now we're not just saying, go ahead and enroll in this. You actually have to sign up for a consultation, meet with one of our coaches. You can do that right on the website right there. And then our premium systems. If you've ever, been looking at the STEP system, looking at the bear market survival guide, cash flow condors, tackle 25, they're all 50% off right now. And they're amazing value in those products. Matt, talk a little bit about the sale, just if you can for a second.
We do this every July 4th. We celebrate America's birthday the right way as well. And if you're looking to get enrolled in any of our programs, we'd like to offer some substantial discounts during this time frame and take advantage of it.
Yeah, yeah. All the details are right there on the site. I dropped the link in the chat for you guys out there. So if you have any questions ever, team@tackletrading.com, we can help you out. All right, let's get down to market analysis. Let's talk about what's going on there. First, red candle in about 10 bars here, Matt. You know, we had a nice breakout. Markets have been healthy and bullish. S&P 500 now hitting its head up here for the first day in quite some time. How are you reading this technically first?
Technically, it's a little bit difficult because you're obviously looking at this last little 10 bars in the market and you're saying, okay, you had nice price appreciation. And you could obviously understand a little bit of a pullback after, a nice little technical movement in the market. But I do think it's a little concerning technically, given the fact that we did break out of that 4,300 level there on Friday and then basically gave all of that back. Now, I don't think we should overreact to one candle on news that, quite frankly, is not that important when all we're seeing is basically giving up Friday's price action a little bit. So I don't think we should overreact to that. But I do think it's a little concerning that on a breakout type of a candle where you have a no sell day, to not see at least that attempt to continue is a little concerning, in my opinion.
I had to let my old dog in. He's banging on the door. He's my office buddy and my trading partner, no doubt about it.
Dude, Max has to be in the halftime report. People might not know that, but Max
is a
is
cash flow
always
trader.
there.
Max has been in the halftime.
Oh, dude, Max turned into a cash flow trader 8 years ago. He's been there.
He's
an old dog now.
That's exactly right. I agree, though. I don't think that you should overreact. It feels like here on a Tuesday, we are getting hot take Tuesday and overreaction to many, many bits in the news, quite frankly. But, markets are up at the high. I get why you're going to see some hesitation here. The real story, in my opinion, is happening not just in the broad markets, but also in the sectors, which we're going to look at in just a minute.
And I do think that's where the technical story is really, really told there. In the broad market, you're range up and you're seeing a collection of all the basket of every stock in the market, and this is the reflection. But when you want to really understand the story of what is happening, you have to look at the sectors from a technical perspective, because this is where you're seeing the real story. And again, Tim, I'll wait till you kind of get through your process, but I do look forward to breaking down the technicals of the sectors here in a little bit.
Well, and let's stay on the S&P here for a bit if we can. I just want to get Emily and Mark's take, before we move past it. Emily, obviously the markets have been very healthy and bullish here for quite some time. The S&P in the huddle last week, I literally wrote this headline almost every single day. S&P 500 faded higher, moved higher to an all-time high, because we literally were hitting all-time highs. And even today, Matt, with the red candle, we had an all-time high there on the intraday at 43.48. Emily, how are you approaching these conditions? Are you approaching the summer with cash flow strategies? Are you taking just the general bullishness as an opportunity to cover calls? Like, what's your take on the market? What's your read on it?
It's pretty much been the same as every other time I've been on. It's just cash flow for me. I'm a little bit heavy on cash only for only because I'm kind of like on semi-vacation mode here because my parents are here. Mm-hmm. So I'm really not that active in the market as I normally would be, but I'm still doing cash flow, cash flow trades and looking for opportunities, but not as heavily as involved as I would be normally. But still, there's opportunity in the market. Just because we have one red day doesn't really mean a lot to me. It's still cash flow, still a cash flow environment for me and what I do.
Mark, what about you? I think you're probably a little bit more, hesitant to that. You've been approaching it from a cash flow perspective for years. I don't think that's going to change. But what are you reading here in the market action?
I'm just listen. And anyone that knows me or follows me knows this is how I am. If I have a nice, easy to read bullish theme, then I'll go for price appreciation. If I don't see it, if I only see technical strength, which we've seen, well, one, I'll try to gravitate towards areas of the market, begrudgingly lately towards tech, but that's where the strength has been. And Matt's been all over that in the halftime report and that strength. But I'm very, very conservative if I don't have a theme that makes sense to me. The post-vaccine theme rotate the value that made sense. Oil theme has made sense. There's themes that make sense to me all the time. I just haven't seen one in the market, and so just a little cautious right now.
Well, it's a light news cycle. There's not a lot of real drivers, and even in the last couple of weeks since that Fed meeting, and then the market kind of overreacted to that, and then came right back and fired back. Theme might just be general bullishness over the course of the last year and a half. Matt, I ran some data yesterday with you in preparation for the podcast that we're going to run, and some of the stock market performances we've seen since post-pandemic are truly incredible, and we're going to go through that when we do podcast here today. I still got this as a bull market, very healthy market. I'm probably maybe leaning a little bit more on the bull side than I'm hearing from a couple others. Matt, any other thoughts on the S&P here?
Oh no, for me, this is I didn't even know we were questioning the bull market,
No.
quite frankly.
Yeah, we're not questioning whether we're in a bull market.
Like I don't think anybody's questioning that. So no,
it's a question of how aggressive do you want to be, right?
Mhm.
On a
Well-
short-term basis and that. So,
Well, I look at it from, yeah, you are a little bit overextended, and yes, you are seeing a little bit of a sell-off here today, but again, I don't have this any other day. I don't have a difference. Let me put it like this. I don't think today represents anything more important than Friday represented,
Right.
I think
that's-
that's well said.
right? And so no, I think we're in a general bull market, and you're at the top end of the range. And again, when you're talking about the story that's being really told is the story in the sectors, right? When you take a look, and if you don't mind, Tim, I'm going to take a moment here to go into a little bit of the sectors here. When you look at the sectors, and again, I do think that this is where the story has been being told, and it's been being told ever since the pandemic started a year and a half ago. And so when you're looking at when all you're doing is looking at the S&P, and you're saying, okay, the S&P and treating it technically is perfectly fine, but I don't think it's giving you the best picture of what is actually transpiring in the marketplace. I do think the sectors have been telling that story and will continue to tell the story in the foreseeable future. And when you're looking at these sectors, at Tackle Trading, we really kind of look at sectors from and let me get my newsletter over here. We look at sectors from three different categorizations. Two of them are aggressive and one of them is defensive. You have in your aggressive areas of the market, you have what we consider your growth areas. That would be tech, discretionary, and communications. In the aggressive areas of the market, you also have your subcategory of cyclical areas of the market that are very economically sensitive areas of the market. And that would be your financials, industrials, energy, and basic materials. And then you have, your defensive areas of the market, and that would be healthcare, staples, utilities, and real estate. And so when Mark's talking about a theme, and he's right, there's no unified theme right now that is driving a certain area of the market. You have, and I've said this a few weeks ago, and I still believe it, the market is still confused. And I still believe the market is confused because it has not gravitated and attached itself to a unified theme that really has been a driver in the market, from post-pandemic, but very clearly following the election from last year, the market started gravitating to the vaccine distribution, economically improvement type theme that was supported by the Fed put, as well as a historically dovish monetary policy, the fiscal backdrop of the U.S. government losing their mind and saying, how many trillions do you want? 1, 2, 3? 4 anybody? 5 maybe? Right? And so you had this massive investment from a fiscal and a monetary perspective coming into the market. And that theme drove the market for 6 consecutive months where we saw an amazing first half of the year in the financial markets in general. But it was a unified theme. Right now, there isn't really a unified theme that these markets are really attaching itself to. And so I just want to make that point on kind of why Mark is a little hesitant, because again, these unified themes have been fairly important to the market, and the market has certainly attached itself to them. But when you're looking at these areas of the market, we segment the growth, the cyclicals, and the defensive areas of the market.
And I had a couple questions on that.
Yeah, go ahead.
Well, no, I mean, I love this. And this is a change that you had the coaches make just this last week, over in the newsletter.
We
right?
like color coding things.
To color code it. But I'm looking at these themes, and you and I have had this conversation, but I do think it's fair for the audience to kind of hear your thoughts on this. Why is financials in that yellow theme with cyclicals instead of defensive? Because that traditionally is not how it has been in the past in terms of John Murphy's 1990s sector rankings and sector rotation.
I think John Murphy would agree with me over the last 10 years, by the way. If he were to write that book in 2021, he might have a different opinion of the financial sector. When the book was written and when everybody categorized these aggressive defensive type areas of the market in the 70s and obviously the 80s coming into the 90s, the financial sector was a very, very defensive sector from a historical perspective, from a price percentage movement, from a safety perspective, especially in downward moving markets. And I think what a lot of times what attaches itself to a defensive theme is when the proverbial hits the fan, and where does the money gravitate to, right? When things are cooking out there and everything's going good, nobody really wants to get defensive. It's when things are going down and things get a little scary, a little hairy out there, and people all of a sudden say, "Oh, let's get defensive." And so typically speaking, defensive sectors do not move as much in bull markets, and they certainly don't go down as much in bear markets. And the financial sector for decades and decades, from the 1930s all the way through the 1990s, was historically viewed, and accurately so, as a defensive sector. I just feel personally that, and I feel very strongly about this personally, that the financial sector went through a massive evolution in the late 1990s when then President Bill Clinton eliminated the Glass-Steagall Act, which segmented the financial institutions from investing banks as well as lending firms. That allowed them to create the subprime market where they basically did bonds on bonds on bonds on bonds on bonds. And we all know what happened to the financial sector afterwards. Over the last three market cycles, starting with the 2000 market crisis, all the way into kind of the recovery from the pandemic. So when you look at the dot-com crash, when you look at the subprime market crash, and when you look at the pandemic crash, those three, historical defined market cycle crashes. When you look at those, things in the 2000s, and let me get my exact numbers here. In the 2000s, the 2002 through 2002 dot-com crisis, the financial sector, I believe, went down about 31%. Well, the S&P went down 48%. The financial sector went down 31%. This is right in that zone of when it was evolving into an aggressive sector. It did better than the market in that time frame. But then when you're talking about as the subprime market really took hold in 2002 through 2007, the market went up about 101% in that time frame. The financial sector went up 112% in that time frame. So a slight outperformance against the broader market in that area of the market. But when you're talking, 577% against, yes. And then when you go to the subprime meltdown, though, this is the kicker here, and that's that 2007 through 2009 market. The S&P went down 57% in that marketplace. Now remember, in .com, the financial sector did what? It did better. Defensive areas of the market typically do better when markets get a little scary, right? Well, what happened in 2007 through 2009? Not only did it underperform the market, remember, the market went down 57%, the financial sector went down 81%. Went down 81%, by far the worst sector, because it became a bubbled type sector in the subprime areas of the market. And then when you look at it for the last 12 years, it's very correlated against the aggressive areas of the market. And right now it's correlated against the cyclical areas of the market. And so I'm not sure John Murphy would have the exact same take in 2021 as he would have 30 years ago.
Yeah.
And I believe the financial sector, from a price perspective, from a theme perspective, does fit with the aggressive areas of the market. In fact, I put it as the third most aggressive area of the market for my personal rankings, but I do put it into the cyclical areas of the aggressive side of the market.
Well, and that's a subtle argument you and I will probably have a little bit on the podcast because I think it's a fun one. Who's third, who's fourth, who's fifth, all that kind of stuff.
Yeah.
It could be industrials, could be financials, but here's the kicker though. Nobody's arguing that it's not up there somewhere, and it's somewhere in that first 3 or 4 of the most aggressive sectors.
And again, I certainly understand anybody that would be like, hey, finance is defensive, right? It's traditionally categorized as defensive. There's a lot of stocks within the financial space that is defensive. But when you look at price performance, it behaves very similar to aggressive areas of the market, if not one of the most aggressive areas of the market.
Bro, the coach in the pregame can say we're a running team. If they come out and pass it 55 times up and down the field, they're
yeah, they can say whatever they want.
They can say what they want. Performance. The numbers are what
we got
matters.
20 years of data here. The numbers are pretty compelling.
That's exactly right. And, by the way, we're going to be doing a conversation about sectors, sector ranking, sector rotation, sector categorization, everything sectors on our podcast here today. I'm very much looking forward to it. I did a bunch of research on this data on different cycles over the weekend. So excited to bring that.
Yeah, I'm looking forward to that conversation as well. And so when you're looking at the sectors, and I just, again, question, me, I like to be thorough.
Mm-hmm. Yep.
Now, in terms of the coming back to the sectors and how the sectors are kind of telling the story, this market has been a theme-based market, and I do not believe the market has a theme. But when the market doesn't have a theme, what do we say? Bet on growth, right? When in doubt, bet on tech. And so what you've been seeing over the last 3 weeks, if you've seen a little bit of these cyclical areas of the market, and I do love color coding things because it makes my old eyes, it makes everything a little easier on my old eyes here. But what you've been seeing is constant downgrades in the cyclical areas of the market over the last 3 to 4 weeks.
And Matt, I just want to comment. This is why I love the halftime report and I love the team. When you said that statement a week ago, and it wasn't the first time you said it, when in doubt, bet on growth, right? I'm always, unless you have a really weird situation like COVID last year, I'm always going to have exposure no matter how bearish I am.
Yeah.
And that thing, because I'm begrudgingly, I use that term, but you saying that resonated and got me to think about it. I'm like, fine, right? And almost all of my individual plays.
I kicked you off the cliff.
Okay. It's because I'm going to do something, I'm going to do a conservative, look for opportunities. But that saying resonated with me. The market's confused. When the market's confused, and when in doubt, bet on growth. Bet on growth, and your favorite growth companies, and try to find a good prices and value and all that. But I think that's a truism to hold for the rest of your life.
It has for 12 years, and I certainly, I said, I can't remember when it was. I think it was the podcast coming into the year. And I've said this for the last few years, but when anybody asks me what sector I feel is going to do the best for that year, I will say tech every year, right? And now I'll try to shade, but I will say tech every year. And I do believe most years you will be right. Every now and then you'll look garbage. You'll look like garbage because tech will get blasted. But I just feel like we're going to go through another tech evolution over the next 10, 20 years, like we have over the last 10 to 20 years. So I think that's an easy call, actually. But when you look at the sectors here, again, we keep coming back to this story being told. And what this story has been being told over the last 3 to 4 weeks is, as you've seen the momentum shift in the cyclical areas of the market. Remember, we are talking about these areas of the market 2 weeks ago violated support, 3-4 weeks ago showed slowing momentum and double top types from a technical perspective. You've been seeing downgrades here versus where you're seeing the march up. You're seeing marches up in discretionary comms technology. And so you have been seeing a little bit of that rotation once again from the cyclical areas of the market coming back into those aggressive, what I would consider ultra aggressive areas of the market in the growth, tech, comms, and discretionary. And so when you're looking at these technically, on days like today, I'd like to see if anything truly changes, right? And because a market can come down, it can spark some fear and it can show some volatility, but nothing really transpires technically. When you're looking at materials, materials was in a bearish retracement. Materials was kissing up against some of these downward moving averages. And quite frankly, resistance is going to hold until it doesn't. And that is a truism as well, the same way support is. So bet on support the same way you bet on resistance until it fails. And so when you're looking at that as a resistance level, it just simply didn't break out. And if it didn't break out, the path that it typically takes is coming back down into support. And that's the only thing I'm seeing in the basic material space. When you take a look at its twin sister in the energy space, we downgraded energy here over the weekend in the newsletter. And quite frankly, it deserved a downgrade. You were looking at a double top scenario. You were looking at slowing momentum. You were looking at a lower pivot of resistance. And even though it's an area of the market that I personally do like, and I do kind of lean to the cash flow side, I lean to the cash flow side because of the trend. The trend has now failed. The trend has now changed. And now you're looking, and honestly, if you're looking at today and you're ranking, you're probably putting it now down into neutrality right now. And again, you're looking at a lower pivot low, whatever the news is. We can talk about the news in crude here in a second, but that doesn't change the fact that a week ago you did form a lower pivot of resistance. And you can't just not see that. You have to see that. And so when you're looking at that, yeah, you got to like it, but it's kind of like a stock we put on the option report. And I had the pleasure of doing the options report for the first time in, oh man, Tim, it's been a time or two.
It's been a minute.
It's been a minute since I've said. So I had a lot to say.
You did a great job. I really enjoyed the video. I went through it on Sunday.
Thank you.
Yeah, it was great.
Thank you. I could have went another hour.
Bro, we know.
That means I did go an hour. That's my way of saying it.
I got a chuckle out of Emily.
Like there at about halfway, I'm like, wait a sec. I'm only through 2 stocks. And then I was like, I got a rapid fire, and my version of rapid fire is 5 to 7 minutes. It's 5 to 7 minutes per stock. That's all. Somebody appreciates the detail.
I do.
But when you're looking at EOG, and I talked about this with EOG, today it's down 2.5%. And some people not tackle trading, but some people are like, oh man, that's tough. That's tough. Well, it's kind of like the sector. Who cares what it does underneath resistance? The trade called for above 88, 89. And so when you're looking at this downward movement in price, it's like, so what? The trade called for it to break out. It didn't break out. Just be patient, allow it to set up and establish its parameters again, and then make another go at it. It hasn't done it yet. And so that's just what the point I want to make on energy is, yeah, the news is a little bit negative here today, or I don't even want to say negative because I don't believe the news was negative. The news was volatile is what the news was. Mm-hmm. But again, what transpired and did anything change? Well, to me, yeah, it's a volatile negative candle and you got to be concerned about it. But to me, you were already looking at some degree of neutrality. And the only thing that transpired today was the confirmation of that neutrality. We were leaning there and now we got there. We were going north and we ended up north type analysis, in my opinion. When you're looking at the financial space and the industrial space, these are 2 areas of the market that I do have a slightly different take on. And whereas with the energy, I kind of feel like it's just another day, quite frankly. And with the basic material space, I kind of feel like resistance just held. These 2 areas of the market, the industrial and the financial areas of the market, had that opportunity where you could have really kind of broken out of that right shoulder and ran. And I still think that is alive and well. It's just going to take a little bit of more time to set up. And so when you're looking at the industrial space, as it was fighting up against these moving averages, you see the fading action as it gets above the 50-day moving average. Those are areas where you're looking at, man, if we can just trigger and continue, you can see some real good price action here. That stopped on a dime coming into the weekend. Obviously, with the downward movement in price, you're no longer looking at that as a potential trigger. At least I'm not looking at that as a potential trigger. I'm looking at this reestablishing that intraday analysis, because when you're looking at this 30-minute chart, excuse me, let me go to an hourly chart very quickly. When you're looking at that and I'm saying, okay, I got some cleanliness here all last week, right? All last week, plays defense, resistance is shoring up. Yeah, I like that intraday analysis. And then on the weekend, coming into the weekend, Thursday, Friday, you break out and you have your ability. Look at this increasing support on the intraday. Look at the tight 103.50 type trigger there. You have your opportunity. The volatility ensues over the weekend, comes right back down into those ranges. Now, the reason I feel like it needs to reestablish itself is, where's the trigger? I have a hard time if I can't identify a clean trigger. So am I coming back to the 102.5? And am I waiting for 103.5? And then when I come out to the daily chart, now I'm looking at, I think it needs to get, my point is, I think it needs to get cleaned up. That's my point. I think we need to get a little cleaned up. And the only thing that allows it to get clean is a little bit of time. And so I do think coming into the week, there was some anticipation building for the potential run in industrials on the back of some potential infrastructure, more infrastructure conversation. I think we're all getting a little sick of the potential infrastructure conversation, or maybe I'm just preaching my own book there. So we were anticipating a little bit of pop and run here in the financial space. I think a little bit of the similar analysis was happening. Can we reclaim these right shoulders? That was the question. We didn't do that. I still think that's the question. Can they pop and run on the backs of more banks announcing stock buybacks, more banks announcing increasing dividend, kind of like we saw with Morgan Stanley and a few of the other banks last week? Can that start running? Can the financial space start running on that theme? I still think that is potential. I still think that has potential. But again, you got to see 37 closed. And that's the point in the sector, is it has the opportunity, but you got to see it close there. You got to see it close there, because then you can start to see the momentum start building. And so when you're looking at these cyclical areas of the market where, quite frankly, a lot of the pain is today, right? And I don't want to say pain, because we're talking about 1 day's price action here, but where a lot of the downward movement in price is, it's in these areas of the market that were, quite frankly, in pretty big battles before the weekend. When we're talking about the reclaiming of the right shoulder, you're talking about a market that is battling. You're talking about a market that is fighting. It got blasted at support. It's trying to reclaim resistance. You have this battle ensuing, and so you want to see that come to some degree of conclusion. It did not do that. It had the opportunity. It needs more time. Well, when you look at the growth areas of the market where we have been seeing over the last few weeks money start to rotate into, you're talking about the discretionary space, the tech space, as well as the communication space. And so when you're looking at what I would call the number one most aggressive sector, not discretionary, technology, when you're talking about the most aggressive sector out there in the market, I do think most people would consider technology that most aggressive sector. And the numbers certainly do back that up, by the way, as well. Both from a technical valuation perspective, bubble, any degree of analysis would lead tech into one of the most aggressive sectors. You're talking about a doji after an extended run. What else? There's nothing else there. There's not more analysis than that. It's a doji after a market that got overextended. This is just hesitation analysis. That's all it is. And when you get into hesitation analysis, you always talk about high base or flag patterns. And so the high base is simple consolidation. Let's see that. The flag comes down to the 9 EMA. Here's the high base. Here's the break. Here's the run. Well, we got tired. Here's the high base. Here's the break. There's the run. You need time. You need time here. And so when you're looking at the aggressive areas of the market, technology is a little bit overextended. It's a little bit overextended. Give it a little time to cook. Maybe we can repeat that break and run. Maybe we don't, but you don't know until you give it a little bit of time to breathe. When you're looking at the other aggressive areas of the market in communications, I know comms is coming down on the day here today, but I don't have any hesitation here in comms. You're talking about a market that's been very consistent over the course of the last couple attempts on that 9 EMA. It literally kissed off. It broke out on Friday. It kissed off the 9 EMA today, and it's trying to reclaim. If you got to trade in comms, I kind of feel like you take the trade. How do you feel about comms, though?
Well, to me, listen, it just broke out of intraday resistance. It's now testing that old resistance as new support on the intraday, and you got a red candle on the daily on the 9 EMA. Still gorgeous and beautiful. Facebook, Google, the leadership there. I mean, even Google's up today here, even while comms is down. So, and that's after the backs of pretty good moves here recently out of those two leaders in the sector as well.
Well, and you bring up Facebook, and Facebook was one of these stocks we put on the options report over the weekend. And quite frankly, did anything transpire on Facebook today?
Nothing's changed. The trigger's still there.
The trigger's still there. The stock's still kissing. It just didn't do it today, right? Well, let's give it a chance tomorrow, especially if comms holds that intraday support level. And then the last one is the discretionary space. And I do want to take just a moment on the discretionary space, because this is an area of the market that's been a little bit hotter over the last couple of weeks than other areas of the market. And this is the we can go back to tech, and we can go back to a million other right shoulder type breakout patterns in the market. But this is why we were and still are excited for the potential of the resistance breakout in specifically industrials, as well as the financial areas of the market. When you look at these areas here, the discretionary space, here's the breakdown, here's the attempt to recover, here's ultimately the breakout. Ultimately, when you did break out, look at that nice run. Okay, that's what you were anticipating and still are. Remember, this is the battle you're in financial, in industrial. For the discretionary space, it took another 2.5 weeks. Now, it might not take 2.5 weeks. It might take 2.5 trading days. We don't know. Us traders, we don't get to pick when the market wants to move. We just have to be ready when it does. And so when you're looking at this, when you're looking at specifically the discretionary space, you do have this as a little bit overextended. Absolutely have this as a little bit overextended. It's an area of the market that's been very, very hot. We attempted to reset that trigger coming into the potential breakout. I thought it did, and I still do. But you're still overextended coming into perhaps a very important all-time breakout on a weekly chart that looks really, really, really healthy in my opinion. And so I do think, again, the theme you're going to see here today, you will need a little bit of time in the sector to solidify the sector. But once again, if there's a trade in discretionary, are you going to take the trade even as the sector solidifies itself? Yes.
Yes, I will.
And so even when the sectors need a little time, man, stock pickers market, bro.
There's a lot still out there. I bought a few stocks even this morning. Yeah, absolutely, still stock pickers market. A lot of
that's right. I got a Queen's Court pick, bro.
I got a good one too. I believe.
I got a Queen's Court pick.
It's always up to the Queen.
I may get my head chopped off because I'm feeling a little saucy today. But we will wait. But we will wait and see on that one. Did I get my head chopped off last week? No, I survived last week. I got my head chopped off the week before.
You weren't here last week.
You weren't here.
That's why I didn't get my head chopped off.
Yeah.
Like I got my head chopped off 2 weeks ago. I needed 2 weeks to recover. That's what happened. Now, in looking at the last areas of the market, that would be the defensive areas of the market. And again, the defensive areas of the market, utilities, real estate, consumer staples, as well as healthcare. Let me take a look at those charts very quickly. Real estate fighting against the right shoulder, but who here kind of likes real estate right now?
Yeah, that's a king's bed a little bit. Looks
it
like
it's a king's bed. Look at you, like that is a king's bed
pattern. That's right.
I do like the legitimacy of the king's bed pattern, but again, the king's bed pattern is just again a failure of some support and the reclaiming of that resistance.
Yeah,
right? And look at that. Look at how tight that 45 level is. I
It's
like
t-
that.
I do
I
like
like
a
that
tight
45 level. So
resistance.
keep an eye. And hammer candle coming into it.
Nice.
Kind of like that. Utilities, nobody likes it. There's nothing to like here. There's nothing to see here. Is that enough? Like,
Yes.
okay. Healthcare broke out. Look for a little bit of consolidation, but an area of the market that I feel the market has fairly consistent right now. So recently broke out. Look for it to continue to run. Don't have any concern there as well. And then I believe we did, where's Staples at? I need my P. XLP fighting up against a very similar right shoulder break, potential breakout needs time, very similar to what we're seeing in the other cyclical areas of the market.
You know, I'm interested to share some of the discretionary data we found over the couple of decades. By the way, that's a very aggressive sector.
You know,
at this point, it always had, it didn't always perform like that, though, Matt. You know,
in that and we've done a lot of sector analysis over the course of our lives, but yesterday Tim and I decided to just do some price performance sector analysis. The one question I have on the sectors, what sector do I have the most questions on? Like the most of, I don't even know what this is about anymore.
discretionary, maybe. It's up there.
I'm pretty clear on discretionary.
Ooh, interesting.
In terms of the categorization, how it's treated,
Financials.
I mean, don't get me wrong, discretionary has evolved as much, if not more, than even financials. But I'm pretty clear on where I would put both of those areas of the markets.
I don't think you have the biggest
Like
questions.
I've been arguing
though.
financials was the aggressive
Yeah.
sector for 12 consecutive years.
You've
so.
got a pretty firm take on that, so I don't think you have the biggest questions on financials. I don't know. Well, I don't know. I'm interested.
Utilities.
Really?
Yeah.
They
Utilities.
did have
Where
some
do you even
weird
put it?
performances. Yeah, they've had
Yeah.
some weird.
Where do you even put it?
Yeah. Did you know utility sector was one of the leading market sectors between 2003 and 2007, Emily? Literally one of the best performers right before I started trading. Yeah. It was a big bull mover. So there's some interesting questions there. Not today.
And it underperformed the pandemic.
Yeah.
It just doesn't make sense.
Yeah. It's a weird one. I do have one more technical question on broad markets before we move to commodities, if we can. I love the sector breakdown analysis there, Matty. Appreciate it. The Russell 2000, though, if you can give me the real quick, just simple question. I was excited seeing this directionally. This candle bringing it back into the range. Is this a changing character from that potential breakout, Matt?
No, not yet.
Not yet. Still early.
Well, I didn't want to say yes because I don't think so yet. But you do have an increasing volatility against the entire marketplace and a failure of multiple support levels against a increasing support potential breakout. So yeah, it's concerning, but I don't want to call it dead yet. I mean, we're talking about a market that just had the best first half that it's had in decades.
Yeah.
I'm not calling anything dead when I think we're at the start of a 10-year cyclical market, quite frankly.
Fair. It still could put in a higher pivot low. We'll have to watch that one as it plays out. All right, let's move
now. This support pivot and potential breakout is dead because that killed it.
Yeah. For me, and I did a video on this for the Cash Flow Vikings this morning. For me, consolidation patterns are easy. I try not to overthink. Resistance is resistance until resistance isn't resistance. So, I mean, you had several tests up there in the zone over the last 3 weeks. Eventually you're going to have just, a throwback candle if you can't break. It doesn't mean anything. I mean, come on, who hasn't seen the rut do this before? Who hasn't seen the rut do these long consolidations, resistance holds, support holds, back and forth for a long period of time?
Still got higher pivot lows, though. So that's where my question's coming from. But I see what you guys are seeing. All right, let's move into.
Well,
go ahead.
Just one quick thing. And the reason I was a little hesitant is this.
Yeah, there's
just a little subjective trend line. That's all. Just a little connecting the dots. That's all.
A little tiny one.
Tim's
directional. Tim wants the rut to break
Tim
down.
wants
Tyler and I wanted to just stay and do whatever it's been doing for the last,
you cash flow traders drive us directional traders crazy. So if you want a civil war on your hands, that will start.
Listen, you guys all try to momentum trade a consolidation pattern. Emily and I will just cash flow it.
You guys can talk. You can talk about your cash flow. We're on the backs of the best first half of a directional market in the history of the markets. There you go.
Right, that's right. Little delta and theta fight here. We have those fights all the time.
Listen, the theta traders just get to always declare victory, and so
I know that's why we're theta traders,
I
because
know.
we always win.
Listen, you pick the winning side. I get it.
Listen, Tim's been waiting for the Russell to break out while Tyler and Mark and I have been cash flowing for the last 6 weeks. Okay, while he's still waiting for the breakout. So
listen, it takes patience as the Delta dog.
That's right. When it happens, it happens. You can't, like Matt said earlier, you don't get to determine when the market moves. You just get to react to it and want to prepare for it.
And while we all wait and see the market breaking out, the theta trader's like, okay, I went to the beach over the weekend and I cash flowed a positive 400 theta. What did you do?
That's right.
Didn't do that.
That's right. All right, let's move into
Emily.
Go ahead.
Virtual high five.
He wants to
Double
declare.
high
Listen, I just danced on her own grave, and you guys got to join the party.
I have no idea how you're claiming victory on that one. All right, moving on into the commodity market next here. Crude light. I got to get Mark's take on what's going on with OPEC here. Last weekend, we were reporting OPEC plus meetings that were happening on Thursday and Friday. There then became a little bit of, some tension between the UAE, United Arab Emirates, who's a part of OPEC, and the OPEC plus broader group about what their output levels should be and how they define them and all that kind of stuff. Looks like a deal's not happening here, Mark. What happened? What does it mean? What's your read on it, if anything?
I mean, this one's an interesting one. Just as a oil, self-proclaimed junkie, I love oil news. I love OPEC news. Why? I don't know. Why do we like the things we like? I just do. Always have gravitated towards it. This one's an interesting one, just from a dramatic theatric standpoint. I don't know if it actually means anything. I mean, we won't know for years, really, to be honest, unless something explodes. But basically, the United Arab Emirates is balking at the deal. They had a deal all lined up to gradually increase production, but very gradually, everything, but you had a holdout in the United Arab Emirates. And they just didn't agree with the Saudi Arabia, Russia alliances, and they couldn't overcome their differences in the short term. United Arab Emirates asking for a higher baseline of production from April 2022, and the latter group, basically everyone else, for an extended commitment through 2022. So you just have some good old-fashioned politics going on. We were talking about this pre-production. These things usually work themselves out, right? Negotiation, even when there's stubbornness. I mean, listen, this is nothing compared to Russia and Saudi Arabia a year ago going to war with each other over oil prices. This is like minor drama compared to that, but it is like something, right? And it has a lot of legs to play out. I mean, for all we know, a week from now, 5 days from now, they say, hey, deal, agreement, accord reached. Probably a bullish catalyst. But when you're at technical resistance, whenever you have anything, right? Any news story, any uncertainty, anything, you're going to pause, you're going to halt, you can even slide a little bit at resistance level. So it's an interesting story from a theatrics, oil junkie perspective. Does it mean anything long-term? There's just too many variables and legs to the story to actually know that. You still have lots of people. Goldman came out today and says, ignore OPEC drama. World needs additional inventories to avoid critically low inventories. Other people, including U.S. energy sector, saying we could easily top 100 barrel. So the sentiment's still there. I think this is just drama at resistance. But the story, if it has legs, it will play out in the coming weeks, months, and even years.
I got to be very blunt. I'm having a hard time seeing the story actually becoming a long-term real story. I really am having a hard time with that.
These things usually work themselves out. I mean, when I say usually, I mean.
Well, even what they were debating, Mark, they were debating production increases, so putting more supply out into the market. They pulled that back. Shouldn't that be a bullish catalyst for oil? There's less supply being driven into the market.
And once again, this is an oil junkie theoretical discussion that we could spend 20 minutes on that would bore most people. Short term, yes, but long term, it creates this worry that everybody starts producing more because they can't finalize agreement. That's the whole, meta argument, if you will.
Wake me up when something actually happens with it, quite frankly.
I think that's the appropriate response.
Yeah. It is hesitating at resistance here, Matt, technically, but it also is above the 9 EMA. What are you seeing in the chart itself?
Well, a couple comments very quickly on the news story. First and foremost, the news story was very, very clear 3 hours ago. The media reported that oil was going up on a failure of a deal. I wonder how they're going to report it now.
Listen,
They got it wrong. That's the only thing that happened from a news perspective today. The media got it fundamentally wrong. That's it. They should have waited an hour and a half.
They should have waited more than 5 seconds before.
Yes.
Hey, let's create Bitcoin going to zero because
So when
guy
the
named Ralph in
headlines,
Iowa said he doesn't like it anymore.
yeah, when the headlines are all reading oil up on a failure of a deal, and we're all like, that's not how it works. And then we go to the charts and it's actually down, and we say, well, that's how it works, right? So I do think the price response was far more accurate than the media today. That's point number one. When you're looking at this volatility, I honestly, it could have been anything, guys. Like, honestly, it could have been anything, because I do expect a major battle happening from a resistance perspective. This 75 handle is not just important in the backdrop of this high base over the course of the last couple weeks. When you're looking at that 75 handle, it's you, it's me, it's Goldman, it's Morgan, it's JP, it's traders in their mother's basement in London. It's everybody and their dog looking at this 75 handle and saying, can we break? And if we break, where is the path of least resistance following that? And so the importance and not so much historically, but the importance from a technical perspective, when you look at this from a longer time frame perspective, you see that 75 handle right there. You see the 75 handle right there. You see the 75 80 handles, 75 75 75 75 75. You see that 75 handle play out multiple different times in multiple different market cycles pertaining to oil. And so the 75 handle is going to be a battle. And when you're looking at this on a weekly chart, I simply feel this is range up. And so you're range up. And when you're range up, these types of news stories typically have a tendency to create a little volatility, solidify those longer term technical charts before you see that break. And so I honestly, and again, the theme for me today anyways, and this is how it is directional traders a lot of times, is time. We need some time here on oil. And quite frankly, I think that's what UAE is saying. I think that's what, and Mark, you mentioned Putin and MBS not getting along. I think last year was MBS asking Putin how much oil he can deliver to the rest of the world. That was the level of their argument. Putin said you can sell this much. MBS said that's okay, and so that was the level of that love spat.
We literally need to do a podcast, even if it's in a regular podcast.
I don't know if I want MBS targeting me.
I love the drama, and I might literally be the only one in the whole world that loves it on the level I do. But Putin won that fight. MBS balked, and he will never test Putin.
Putin wins every fight.
There's my hot take Tuesday. MBS will never test Putin again in the oil market.
Why don't we do a podcast where we go through the detail of all the world dictators that are very dangerous and talk about their flaws? I would love to do that. Let's just put that.
I agree. I agree.
Can I make any money on that podcast?
You can, when I break down the behavioral analysis according to Vladimir. So,
hey, Kim Jong-un likes Bitcoin.
Hold on, we ain't doing that. Stop loss.
Stop
loss.
Let's go.
Point. That was my last.
And
point,
I would like
to
to apologize to Ralph in Iowa. I know you really like Bitcoin. I'm sorry that I made you an anti-Bitcoin.
What did Ralph do?
Yeah,
I know. Sorry.
But anyways, point is, at these major resistance zones, don't be surprised when you see increasing volatility and randomness. And that's the only thing I have on oil. I still think you're lining up that potential breakout.
Still, yeah, it's got a bullish trend to it. It can consolidate for a while, but if that breakout happens, there's some interesting action there.
And just to be clear, we are talking about a backdrop of 400,000 barrels of oil. right?
Don't get me going off on it again.
Like 400,000.
We're talking about
the increasing demand argument is far outpacing whatever they're looking at increasing.
It still is the strong argument, and it's still there out there. The global economy is still reopening. All right, let's keep moving through the
Hey,
commodity
Chucky, I
market.
do have one question on the oil. Do you know the time frame on their $100 price targets?
Dude,
Or are
never
they just
throw
saying
those
inflation
out.
might
Come
eventually
on.
tick oil at
Listen,
$100?
No, these people, they never throw price targets.
Okay.
Okay.
I was just
oil
wondering
people,
because some oil in oil you will see by 2021 or by 2022
and I was just going to
or
say that
something
in
like
oil,
that.
it's different than like when UBS or Goldman says this company probably they never throw it out. Oil and the analysts usually talk in terms of 6 or 9 or 12 or 18-month time frames, and so this general push is into the summer of 2022 where they're talking these times.
Okay, I was going to be a little surprised if they're thinking 100 by the end of 2021.
No, I mean
I just don't see
this
that.
is like this slow build, global economy reopening, catch up, push oil prices higher into mid 2022, some first quarter 2022. But yes, that's the
Gotcha. Okay. I just want to clarify that.
Thanks for clarifying. All right, next one here. Let's take a look at gold. Actually, performing pretty well here today. But Maddie, this little breakout of that 1800 zone smacked it right into some falling moving average and some congestion. It brought it right back down into 1794. It's had 4 green bullish candles here in a row, firing off support from last week. And this is on the backdrops as the dollar has actually been firm and still stayed up near its high here, Matt. So gold and the dollar actually kind of strengthening in the very, very short term together. What is your read here on gold, the dollar, kind of inversely correlated against it? Anything there?
Go check the tape on Friday when you asked me that question on gold if I liked the $1,800 breakout. And I said, nope, because it's going to run into the 20-day moving average and come right back down into the range.
Yep.
That's what happened.
That's exactly what happened. So is it developing the pattern at all for that next one in a couple of weeks? Is it kind of
No. I don't.
Too early?
Yeah, I mean, we're talking gold. We're not talking a tech stock. We're not talking aggressive. We're talking gold. When gold violates short-term analysis, it just takes time. It like, look at it. Here, you break out, come right back down. It took time before it tricked us again, and it did trick us again. We all got tricked, or maybe I got tricked. Was I the only one that got tricked on this one?
No, we all got excited.
Okay.
About that. Yeah.
We all got tricked on that one then. So, and then it came right back down, and then it needed time. And then we nailed that one, and now we need time. Gold just takes time. It just does. That's why we love it from a longer term perspective. This is not a swing trading instrument. And so when you're talking about entries on position analysis, that's multiple time frame stuff. That's never done on daily charts.
Well, and we're nowhere near having all those time frames lined up. So I'll tell you one thing.
One last thing on gold, and I talked about when I was analyzing for the commodities report this weekend. I find the candles, and we've had a lot of them in a lot of areas where you have a break of a support level like gold did last week for a short time period, and then you have this immediate reversal. You had it on oil about a month ago. You've seen it on several underbelly stocks. You've seen it on some even mainstream areas, and it's been a very telling candle because when it had a reason to sell from a technical perspective, but then came back up into the range, it's usually followed by strength over the coming weeks and months. So I found that candle last week very telling.
Okay. By the way, one thing that's been taking a lot of time here,
like the Bitcoin candle there 2 weeks ago, right?
Has been Bitcoin here. Matt, still stuck in a range, a little bit of action over the weekend, but quite frankly, nothing to get too worked up about. It went up to 36,000, back down to 34,000. We're now down at 33.7. Anything in the box, I'm just going to be waiting and patient on. What you read here on Bitcoin?
I have less than zero interest
hey, come on, listen,
any Bitcoin.
Any Bitcoin over the 3-day weekend where you're like, that's a long weekend for Bitcoin.
Yeah. And it only took 15 minutes when the market woke up to give it all back.
Yeah. So, well, I mean,
3 days to build, 15 minutes to get back. Welcome to Bitcoin analysis. No, I have less than zero interest. I do have interest in Coinbase.
Coin has a nice chart. It's actually healthier than.
And I snuck it into the options report.
I saw that. Yeah, you
Mhm,
did. You
I
absolutely
did.
did. You took a look at the chart. You
Not
talked
officially a
about the
pick
pattern.
though. Not officially on the watch list, but I do have interest if we can solidify and shore up this support level. And
Mhm.
again, we're a little premature here. We haven't seen it yet, but you're starting to see perhaps an increasing support level. And so I'd like to see it navigate this. We had a very thorough conversation on Coinbase in the Scout Report meeting, and it got vetoed because of where we're really looking at it is the 260 breakout. That's where most coaches really, really like Coinbase, is on the 260 breakout. I'm liking a little bit of a front running, increasing support here. Hasn't done it. So I do have some interest here on Coinbase. So obviously tied to Bitcoin, but no, I any interest in Bitcoin I will use Coinbase as a catalyst.
As the proxy. It's got a better
Mhm.
chart. It's a healthier chart. There's no question about it. And I did like it when you snuck that in on that video, because you did some good analysis on it, kind of explained what you were seeing in
Again?
that pattern. Yeah.
Disclaimer: it got
Not a
vetoed.
pick, not a pick,
Just
not a pick, just an
not a
interesting
pick.
pattern to watch list. All right, let's move into stock talk here next. Only a couple of items. Then we're going to be playing a round of the Queen's Court to start the week as well. I know that Coach Matt, Mark, and myself all have a couple of picks ready for the Queen to submit and see if she likes the analysis or not. Amazon breaking out is a beautiful one here, Matt. Obviously, beautiful long-term bullish. The day that Jeff Bezos steps down as the CEO, Amazon breaking out of a year-long range here. A very, very nice candle. Anything you want to highlight there on Amazon?
No, Amazon is on the options report. I just forgot it out of the video. So I just wanted to highlight this breakout against that 9-month consolidation on the weekly chart. Might not be a better longer-term chart in the market than the Amazon breakout today.
It's a gorgeous one. Yeah, it absolutely is. All right, only one stock news story that I actually wanted to cover here today, and this is out of this IPO out of China last week, DIDI, if we can. And I don't even know what my deep analysis here. I'll just give the news and just kind of talk about it. The Chinese regulators came out and they actually blocked the company from accepting new users, told the mobile app users that have those stores to take down the company's ride-hailing off their platforms. This is 1 week after they IPO'd. And apparently 2 or 3 weeks ago, Chinese regulators told Didi not to move forward with your IPO until we get these issues resolved.
Wait a second. Okay.
Yes.
That's the story.
Yes.
That's the story. The story is not China over-regulating. The story is, why didn't this small company abide by the regulations? Not what this represents to the global economy.
It's
just wanted to be clear on that.
It's a $4 billion company.
Tim, you nailed the story.
Yes.
Just wanted to say, you nailed the story from 3 weeks ago. You guys going to IPO? We need you to abide by these regulations. Didi, what regulations? That's the story.
That'd be true in Canada or China or
true
United
here
States
in America
or
too.
anywhere, by the way. You can't just ignore market regulators. So
that'd be like Elon saying, who's the SEC? Wait a second, that's what Elon does. Like, that's what he does. Like, that's what he does.
Oh,
but the difference is he runs a $700 billion company.
That's right.
That represents a $10 trillion market. Who's Didi again?
They're a ride-hailing company out of China.
Thank you.
Yeah, $4 billion. You know, they're an up-and-comer, growth idea maybe, but just don't ignore the Chinese regulators, DD. I will give you some life advice there. It may not work out well for you.
Don't ignore the Chinese regulators.
That's right. The other news we can do without. AXP got an upgrade. AMC issued some more shares. Not much crazy going on there. Let's move right into Queen's Court. Let's do that here today. And Queen, I have learned in the past not to try to give you some long-winded intro. I'm just going to set it up very simple. You're in charge. We get to submit our best picks to you, and hopefully they're good enough to not get our heads chopped off. We play this game each and every week. Queen, you're up. Set it up. Who do you want to go first? It's your show.
Well, first of all, you guys always say that I just make this up and that, nobody in Team Tackle wants blood. So I'm going to put it out there now. Does Team Tackle want to see blood? Because I don't want to chop people's head every single week off. But if you guys want to see blood, I will definitely give you blood. So I'm putting it out there. Team Tackle, type in the chat. If you want to see blood today, let me know. As the guys start to give me their picks, I will listen in and I will give them what my thoughts are after they have all presented. Matt, you were not here last week, so I will have you go first.
Maddie.
Yeah, hold on.
He's oh no.
I'm getting Queen's Court ready. That's what I felt like 2 weeks ago. And that's him telling me that was funny. I'm first.
Yeah.
You're first.
Okay.
You're up
By the way,
first.
don't Google heads chopped off.
Not a
You
pretty
don't
sight.
you don't want to see that.
No.
All right. Okay. Now, in terms of Queen's Court.
I just
Yeah, I know. Oh, you got to watch the whole thing. It's rainbow. It's good. Okay. By the way, that was the best one I found, just barely. Okay. Queen's Court pick. Tim, you got your
For
pick?
the record, they're asking for blood, so just know somebody will get
They're
their
asking
head
for
chopped
blood.
off. Yep, they are.
I do have my pick, and I'm ready to roll.
Did everybody have a great weekend? Like too much fun this weekend? We need blood today. Blood and circus. Is that what they call for? Well, we give them both. All right. I'm a little nervous now. Okay, so when I was going through my my watch list here today, Tim, I was looking at a couple stocks. Okay, I was looking at the potential reversal in Airbnb. I like that, but I'd like to see it really kind of navigate that 150 mark a little bit better than it is today. I was then looking at Cleveland Cliffs, as I still like that continuation. I detailed this in the options report. Didn't get our continuation trigger that I was looking for in the options report. Got blasted back down, but it did kiss off my nice little trend line, and so I'm still interested in it. But it needs a little bit of time after getting punched like that here today. You know, I was looking at the potential momentum plays in the semiconductors, the momentum analysis bar by bar in NVIDIA. I just don't love bar. It's just not me, bar by bar. I love the more consistent, standard, traditional technical analysis. And so I kind of was looking at Marvel a little bit, and I still like the potential trigger on Marvel. But again, we're talking about a day where the market's come down pretty aggressive. And so I was looking at Marvel a little bit, but I did solidify my Queen's Court pick here today. Option report pick as well, and that is Canadian Solar. Now, we talked about solar last week. Coach Greg was on last Thursday. We talked about solar there. We talked a little bit about solar on Friday as well with Frank's charts there on Friday. And, you know, this is an area of the market that I really, really like what I'm seeing from a technical perspective. You look at TAN here. TAN is the ETF that tracks the solar companies. And then when you look at kind of the breakdown of all the solar companies, I'll come into FinViz very quickly. And if you type in just one, not that one, but if you type in for solar and just kind of hit into solar, and then you can categorize it by market cap. So I'm looking at the biggest market cap companies, and then you hit the chart and you can kind of see them all very clearly here. And so you kind of get a nice little bird's eye view of all the different solar candidates, and obviously here's CSIQ there. And so we were taking a look in depth at all the potential solar candidates this week. And, you know, we put 10 in another stock on the stock report. I fought for Canadian Solar for the options report. Number one, it's a great optionable stock. You can trade a lot of different options on it, whether you're talking about bull call spreads, bull put spreads, you know, naked puts, covered calls. It really does allow you it has the liquidity in the market that allows different types of traders to trade their different types of systems. I'm looking at this obviously from a directional perspective though. And so when I'm looking at TAN here, I'm seeing a nice support level getting formed right there on the 200-day moving average. You see that 9 EMA catching up, and that potential trigger here on TAN is getting real tight. I like it quite a bit. When you're looking at the intraday chart, you see an old support level over here, kind of coincides with the resistance channels. To me, if you can kind of reclaim that 89.50 level, you should see a little bit of a pop in the solar areas of the market in general. Canadian solar a little bit more volatile than, and I don't say that word as a negative. I actually used it as a positive because you like volatility as long as it's consistent. right?
Mhm.
It's the lack of consistency in pattern recognition that really drives technical traders crazy. It's not volatility. Volatility is just part of the course of being a trader. And volatility can actually really, really help you because volatility simply measures speed. That's all it is. And so Canadian Solar simply moves faster than TAN does. I like that. Now, what I like about Canadian Solar here is number one, is very similar to what we're seeing in the sector itself. There are other candidates that are out there that other traders may like a little bit more. For example, the additional momentum you're seeing in First Solar, the flag-based pattern, kissing off $90, which is now a new support level. So it breaks out. Now it tests that $90 support level. Confirmation here. I wouldn't blame anybody for saying they like the momentum in First Solar a little bit more than the potential in Canadian Solar. It's a very similar analysis. Just wanted to point that out. But I like what I'm seeing here from a price action perspective. When I did the options report, I talked about what I wanted to see in Canadian Solar, and I wanted to see a little bit of slowing momentum. We had seen it starting with the chart. We talked about this a little bit in the Friday halftime report as well. When you're looking at slowing momentum, there's a couple different ways you can do that. Number one, you can look at the lows of the day and you can see these contract over the last 3 days. That's an identification of slowing momentum. I like to look at it from an overall support perspective. I like to look at it from a width of the candle perspective. So there isn't just one simple technique that I personally do to identify that. But what I always say about momentum is this: slowing momentum is not an indication of increasing opposing momentum. And I do think the market gets that wrong quite a bit, where they simply see the slowing momentum and they're like, oh, the buyers are going to come back in. No, that just means the sellers stopped selling. It doesn't mean the buyers came in. We need to see that first. Well, when you're looking at this fired back action you're seeing in Canadian Solar here today, look at this 30-minute chart. All this fired back action was on the opening price over a 3-day weekend in a market that was crazy this morning. And I do think you saw a little bit of an overreaction, specifically in Canadian Solar. And I love this V-shaped fired back action on the intraday. Now, when I was breaking this down earlier today, when I was looking at it from a potential Queen's Court perspective, I was identifying this 4360 level as the intraday level of confirmation. We now have achieved that intraday confirmation, in my opinion. I do like the fired back action. You see that fired back action on a support bounce that is now holding. You now see a continuation trigger, maybe above 43, maybe above the high of the day. Again, 4630 was kind of where 4360 was kind of where I was looking at it from an intraday perspective. So I like the technical price action. Now, the one thing I will say is that 4360, when you're looking at a V-shaped recovery on an intraday perspective, that is aggressive upon aggressive type confirmation. If you're looking for a little bit of additional confirmation, which a lot of traders really love, that to me kind of is this 44 level. If you want to see that first, that is perfectly fine from a trading perspective. You got the 200-day moving average right there, you got some old chop over here at 44 as well. So that secondary confirmation for me would be 44. Now, the analysis, you can go look at the options report for the detailed analysis, but that's why I like it, and that's why I like the recovery here. Now, in terms of the type of strategy that you can apply on this type, and this would be more of a standardized, thank you, sweetheart. This would be more of a standardized swing trade is what it would be. When you're, wow, my door just got shut. But when you're looking at this as a standardized swing trade, obviously we're targeting the previous level of resistance. That previous level of resistance would be right in that 46, 47, 48 range. It is volatile. It's going to be a bigger range. Secondary target would be up here in the $50 range. And that's where I think most traders are really kind of in the back of their mind saying, listen, if we achieve 46, 47, most likely we're achieving 50 as well. And so you got a nice entry here. We're just going to officially say above 44. Stop loss for me, again, we're coming down to the intraday analysis. I don't love the stop loss all the way down under 42, but that there is nothing wrong with that. I think you can tighten that up, maybe even underneath 43 stop loss. So entry above 44, stop loss underneath that 43 level, targeting 47.5 by 50. All right. So you got your edge, you got your probability, and that's what the probability is. You got your edge. You also have at least a 1-to-1 reward to risk ratio at target one. That'd be about a 2.5 to 1 reward to risk ratio, more like 2-to-1 once you actually dial in your percentages of the ATR. Your T2 target is more than 2-to-1. You're perfectly fine there as well. Now the option strategy. Again, one of the reasons why a lot of traders like trading stocks like Canadian Solar is because they can do a lot of different types of systems. Now, when you're dealing with a stock with 61% volatility, obviously coming to the sector itself has 43%, it's going to be a little bit more volatile. Now, there's nothing wrong with buying options, even when those options are expensive. You just got to expect that price appreciation. You just don't want to go into it with volatility declining. And so I would have no problem if somebody said, listen, I'm going to go buy an at the money call option, pay $3.50. Nothing wrong with that. What traders can do on a stock like this, though, is they can start offsetting their cost. And that's what I do like here. I do like a little bit of front running bull call type price action here, where you initiate it with a call option, you sell a call option against that. And for me, this would be a little bit aggressive, but because I really like the $50 target, I'm going to sell a $50 call option. And so we're looking at buying the 44 call. 43 call would be perfectly fine as well. 43, 44 call, selling the 50 call option against it. By selling the 50 call option, your cost basis is going to come down over 40%, which is really good for a bull call spread. So if you're a little concerned about the additional volatility, sell something against it, bring in some cash flow, reduce the cost. When you reduce the cost, you reduce the risk. My queen score pick is a swing trade bull call spread on Canadian Solar.
Thank you very much for the wonderful analysis. I appreciate it. I will let you know what I think about this at the end after everybody else has presented.
All I heard was wonderful.
She makes you wait, though. She does. She'll make you wait.
Listen,
You will wait.
you might not see this, Queen, but behind you, I'm the gesture. I'm behind you. I'm dancing, and I'm pointing at Tim and Mark.
Listen, I'm not saying my head's not rolling today. I know it could. So
and we'll go in that order.
And I'm not cheering on their deaths. I'm just saying I survived.
All right.
You don't know yet, Tim. Go ahead.
I love the CSIQ pick, by the way. It's definitely set up very, very nicely. And I appreciate you bringing up First
Hammer
Solar,
time, baby.
You've got a couple of different options in that sector. All right. PANW, if we can, here next. You know, Emily, I was thinking about the news today. I was also thinking about something that was a little bit off the beaten path in terms of what we've analyzed in the past, and I don't think I've ever brought up a cybersecurity play to you in Queen's Court. PANW, Palo Alto Networks, is definitely a growth idea. Let's start with that from the fundamental perspective. Then we'll get to the theme in the news and why I believe there's still some juice and some legs to it. Number one, PANW is a wonderfully run company, but they're a growth stock, okay? They've increased sales by 30% on average annually over the last 5 years. So their numbers are getting better all the time. They continue to put shares out into the market too, because they're still funding those growth ideas. They do currently run a PE ratio that's concerning, depending on whether you TTM it or you look at just, over the 5-year period. Some of it's a negative PE ratio. I'll just say it's a really, really high number. But here's the kicker on that. Earnings have been improving. Even in the last quarter, they crushed the numbers. They upped their full year guidance. And there's some juice behind the theme in this story as well. I'll get to the technicals and the options here in just a minute. What is a story we've all seen in the headlines in the last 9 months? Over and over and over again. cybersecurity attack on this or that or the other thing. Last month, it was meat producer JBS. Over the weekend, 1,500 businesses were affected by a ransomware attack from a Russian-based, organization that
I thought
cyber
Biden
attacked
said
them.
don't do it again.
They did it anyway, bro.
Oh, Putin didn't listen?
They're going to continue to do it. And and it was on this Florida-based information technology company that holds and runs the data for a bunch of different businesses. It's a scary headline. There's no question about it. If you are in the marketplace, you run a business and you're like, okay, how do I make sure I stay secure? Cybersecurity is not only a developing industry, it's been there for a while, but it has huge growth in the future as these things are going to become more prevalent in society.
Yep.
Now, this group is wanting 70 million for this current attack, but that's not why I'm bringing it up alone. That's just an example of the theme that's been put in place around cybersecurity. And I think it's going to continue to move forward. Looking at Palo Alto Networks, couple things that really stand out to me. And Matt, can you give me a weekly chart first off? Long-term big picture, I see potential of a W pattern breakout against the all-time high at 403. It is healthy. It is strong. That weekly chart screams to me growth concept. It screams to me trend developing. Now, you do have some technical choppiness that could happen at $400. If it has to fight into that, fine. I'm not approaching this as a short-term trade. This concept for Queen's Court is not short-term analysis. This is long-term analysis on the backdrop of the industry, the backdrop of the potential. And by the way, in my personal opinion, this is the leader in that industry, not just by market cap, but it's the one stock I always think about potentially trading when I think cybersecurity. There's a couple others, but this is one that is right up there for me. Back down to the option analysis real simply, because I know sometimes people see a price tag and they're like, man, that's really expensive. It's not. Number one, you can always buy one share if you just want to invest, okay? $385 a share. But if you do want to do something with like writing against calls or whatever it might be, this actually is not that expensive implied volatility for a company that can grow like this, 32% IV.
That's tackle 25 covered call type volatility.
That's right.
That's Goldilocks volatility, 30 to 40%. Sexy.
And it's on the bottom end of a multi-year range for its volatility as well. So it's an interesting option choice. You can play equity. You could play leap options. There's a lot of different ways you could tackle this one here with PanW
Tim,
from
can I ask you a question?
Perspective.
You mentioned leap options. Why would you select a leap option over, say, the stock itself?
Simply put, if I wanted to have more control over how many calls I sell against it, maybe there's some math in my position sizing based on the account I'm running that I don't want to play too many shares or whatever it might be.
So to clarify, you would be looking to do the leap because you wanted to sell more short-term options against it in a calendar spread instead of a covered call.
If I'm planning on holding,
if that's the case, yes.
That's
I just wanted
right.
I just wanted to clarify.
That's exactly right. And with the volatility where it is, the leaps are in play here. Still looking at $4,000 on the June, next year leaps, but still that's 10% against the stock price. Gives you all kinds of choices you can play around there. And by the way, yes, equity's still in play, but I do like to highlight the fact that you got a couple of different ways you could attack it. And Matt brings up Tesla here. I'm glad you do, because think about this.
It's
15,000.
Yeah.
15,000 for their leaps on Tesla. PanW also it has been strengthening even on its daily chart here recently. And, today it broke out of a little short-term consolidation. It popped up off the pivot in the 9 EMA. It's been healthily kind of moving back towards those highs. I like it from a theme perspective. I like their last earnings quarter as well. When we covered it, it gapped up and created the consolidation that then produced the breakout. I like the long-term potential and I like the option pricing. This is my pick for the Queen's Court today. Coach Emily.
Thank you very much for the analysis on Palo Alto. Like it. I will let you know what I really feel about it after Mark goes.
All right.
You're not dancing
I had two picks for you today, my queen. Matt stole one of them, and Tim stole the theme on the other one. So I'm going to give you both. I'm going to give you both. I'm going to give you a different way to play CSIQ. I think everybody tackle trading over CSIQ for different reasons. Right area of the markets, industry strength, pretty patterns, all kinds of that. Will you give me a monthly candle chart? You know, like me, like I'm a little cautious in this market right now, so I'm looking down below naked puts and stuff I like. Not anything you add to the momentum. That momentum analysis there that Matt's talking about, that Tyler was talking about last week, that plays into why, you know, potential trigger or whatever. What I like about CSIQ, besides it being high volatility, area space, all that, I like, and I don't get the chance to do it very often, is sell naked puts and get a good premium above the rising 20 monthly. And I don't get to do that very often when that price level is also above the support zone that formed on a horizontal level. I get that with CSIQ right now. So when I look out at August, the 36, 37s look attractive to me. Above the support level, above the rising 20, I get a nice double band of support. Another way to play CSIQ, which is becoming a tackle darling over the last week, but that's what happens with trading, right? Situations develop different ways to play it. Cybersecurity, I don't have anything to add to that theme. Tim laid it out wonderfully. But give me FEYE, if you would. Now, I like volatility, but I also like boring. Like some of my favorite stocks, and I rarely get a chance to play them, are IBM, Juniper Networks. I like boring tech. I like boring tech, and oftentimes they form nice consolidation patterns, you know, play off the low, sell at the high, rinse and repeat. One of the problems, though, with the Juniper Networks and the IBMs of the world is I don't usually get very much volatility associated with them. FireEye had a jump in volatility today, right now in the middle of the range. Right now in the middle of the range. It's down a few percentage points. It was a few percentage higher, but still a little bit of a jump in volatility on news, price action, in which can be a very, very boring stock. And so, you know, theme-based, FireEye, boring, cybersecurity, yada, 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 all of that. But what I like about it is the situation that developed today. Jump in volatility, in a consolidation pattern, and will you give me a weekly candlestick? Once again, I have a rising, will you give me the weekly chart? So I get a technical momentum signal, I get a consolidation pattern, I get a bump in volatility, and I have that rising 50 weekly in this case. So when I get major moving averages rising into consolidation zone, I usually play them, and given the technical jump, the volatility jump, I get a sell a put on increased volatility at the bottom of range and get a pretty decent credit for August. Get a pretty decent credit at those $19 strike prices, which is what I'm looking, because I want to put it above those that rising 50. I want to put it above that horizontal support level. So for all of the thematic reasons and FireEye, why am I picking this particular company aside from the increase in volatility support? They recently announced a buyback program of their shares, something that if I'm going to enter into a position, because this isn't, you know, I don't do trading, I do position trading, I do longer term stuff. I want a company that's healthy enough to be buying back their stock, to give me that price stability, to give me that confidence that if for some reason the technicals were to give out, that I have a company in a space with a fundamental view of their future that can support me owning the shares and then selling calls against them. So I love the CSIQ pick by Matt, give you a different way to play it. I love the thematic pick by Tim, give you another way to play it. I present my dual offerings.
Well, oh, this is going to be hard. This is going to be so hard because, you know, we talked about this at the beginning of the show today, and we talked about it, you know, we've talked about it all, you know, for the last couple of weeks. You know, when the market is uncertain, we bet on growth, right? And what have you guys presented today on Queen's Court? All growth companies, you know, different areas of tech, but, you know, we've got one that's in cybersecurity, we've got one that's in solar, we've got one that's in software. I love them all. For CSIQ, I love that it's in solar. We actually, Matt had, not Matt, but Mark had brought out Run a couple of weeks ago when solar was starting to pick up. So you have a lot of choices in, the solar area of the market where you can, when you look at the ETF, you've got all these different choices. You've got the individual stocks. You could go very many ways, in the solar area. So I absolutely love that. I'm still a fan of the solar area. So I cannot chop off Matt's head on CSIQ because I'm very interested in this space, right? And the fact that it was on the stock report or options report. I do like Mark's play in the naked put idea as opposed to doing the swing trade and doing the bull call. As a matter of fact, when you were building the bull call, I was already looking at the premium on the put side and how I could play that on the put side. I was actually looking at the 34, 35. So that would be my play on CSIQ. I wouldn't go the directional. I'll probably just
I do like the 35 a lot more than 34, by the way.
Yeah, so that's what that's where my eyes were gravitating to. And when I saw the volatility, I was like, give me some cash flow. Like that's exactly where my eyes went. So absolutely love it. And the fact that you have choices, you can play it multiple ways, even better, right? So if you're a directional trader, you can certainly do the swing trade. If you like the cash flow, you can certainly go with Mark's option, and doing the naked put. So absolutely love CSIQ. So you will not have your head chopped off today. You survive.
Thank you.
The theme on cybersecurity, I love it. I love the theme. Tim starting to pick up on Mark and doing that whole thing, stealing Mark's thunder there with the whole theme and explaining all of that. And I absolutely love it. I love Palo Alto. I love this space. Again, an area of the market that I do not have exposure to. And as we are starting to see, tech break out and money gravitating towards the tech area of the market, this is where you go look for opportunities, right? And you go look for things that you probably even haven't played in a while. So, cybersecurity, and like you said, that's going to be a thing that's going to be with us. We're going to be dealing with, with identity theft and all these other things that we have to deal with because of just where we are in technology. So absolutely love that theme. It's a long-term play, which of course I love. And again, you can play it so many different ways. If you want to buy the stock and do covered calls, fine. If your account allows for it, if not, you can go the options route and do your poor boys covered call and do your leaps or whatnot. So different ways to play that one as well. And then we have FireEye. Out of the three choices, I would say CSIQ first, Palo Alto second, and FireEye third. But because Mark showed another way of playing the CSIQ with the naked put, I don't know that I can chop his head off of that, because that's the way I would have gone with the CSIQ play. And all of you, except for one person, when you were presenting your picks, referred to me as Queen. Only one of you referred to me as M, and you can guess who that was. If you want to go back and play the tape, you can. So I'm not chopping you off on what you presented. I'm just chopping you off based on how you address the queen.
Right?
Based on just generalized being you,
Coach Emily.
He didn't even say Coach Emily. He just said Emily.
Oh,
it's a respect issue, bro.
Oh man, it's how you address the queen. It's all about how you address the queen. So
Tim, you know your fault. You know what your problem is. You don't get it in character.
If we're gonna do you know your fault of the other brother, I'm gonna tell you to pick another pick. Like, yeah, I'm gonna chop his head off for just stealing mine and Tim's picks.
Oh man, I cannot chop off Mark. I cannot chop off Matt. So Tim, you addressed me as just M. It's not because of what you presented. I absolutely loved it, but you just referred to me as M. And the people want blood. I have to find a reason to give them blood. So it's not that you brought me a bad pick. It's just how you addressed the queen by not addressing her as the queen.
Hold on. Google calendar reminder on Tuesdays. Queen M.
The title changes from Coach M to Queen M. Remember that.
Hey, listen, if somebody's got to get their head lopped off, it's fine. I still support my pick. I like it a lot.
It is a great pick. It's wonderful.
And most
the only question I got is, do you take the position, multiple time frame analysis that leads to a position on Pan, or do you like the breakout on CrowdStrike?
Crowd's a really beautiful short-term setup. Yeah.
I like them both.
Yeah. That's a good
Like
pick.
them both.
Oh, great. Oh, wonderful picks. Wonderful picks in
All
the
right.
growth area of the market.
You
So
gave them blood. All
Okay.
right. I get it.
it's what they wanted. It's what the people
I
wanted.
get it. I get it. All right, guys. If you're out there watching the show right now, hopefully you got as much value out of that as I did. Really love the analysis. Have fun with the Queen's Court each and every day. Don't like getting my head chopped off, but a couple watch list updates there if you've not done it. And I will say this, if you've not gone through the option report over the weekend, spend some time today, go back and watch the video, get updated analysis on your watch list and all that kind of stuff. But let's wrap up our show here today on Tuesday, back on the S&P 500 or right here on Fire. It doesn't matter to me. Maddie, what are your final thoughts for the team out there?
I have a few thoughts on FireEye's technical chart, but I'll save those till the podcast on the S&P. Nothing. I have nothing update.
Here we are to start the week. A little hesitation up at the top. Marky, final thoughts for the team. Programming notes here at Tackle Trading. Anything you want?
I love consolidation patterns. I love trading. You know, beauty's in the eye of the beholder. Listen, we got
Everybody can find art in something.
Listen, consolidation pattern is consolidation pattern. We had that. I mean, it is way too late in the show to debate.
I'm fired up now.
You know, listen, support is support. Rising 50. I love that trade. Made it myself. Coach's show tonight. We got a full week. Listen, ever since we launched Trading Labs, we got, we already had a ton program. We got even more, all kinds of stuff tonight. We got Coach's show, Coach Tyler, Coach Greg, two opponents that often match themselves on Trade Masters. Going to have them go over how they find picks to begin with, right? We got our scouting reports over the weekend. What's the process they use to find their picks midweek? How do they search for picks? Going to have that as the topic tonight.
Fantastic. 6:30 Mountain, 8:30 Eastern. It's on the events page at Tackle Trading. And we're also going to be doing our podcast right now, actually, here on a Tuesday, Matt, as the markets start for the week. Going to be diving into sector analysis, sector classifications, talking about some of the data and the research that you and I did over the weekend as well around sector performances and different market cycles. Very much looking forward to that. TradingJustice.com. If you're a podcast listener, make sure you find Trading Justice, download, subscribe to it on any of your favorite podcasting apps. Queen, thank you today. Appreciate you. I will get it right next time in terms of how I address the court. Outside of that, Team Tackle, we're